This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices edged up on possible disruptions from a U.S. blockade of Venezuelan tankers as the market waits for news about a possible Russia-Ukraine peace deal. Brent futures rose 65 cents, or 1.1%, to settle at $60.47 per barrel, while U.S. West Texas Intermediate, WTI, crude rose 51 cents, or 0.9%, to settle at $56.66. That put Brent and WTI down about 1% this week after both crude benchmarks fell about 4% last week. In other energy markets, a recent drop in U.S. gasoline futures to a 4-year low cut and gasoline crack spreads, which measure refining profit margins, to their lowest since February.
Asian spot liquefied natural gas prices slipped to a fresh 20-month low this week, weighed by weak demand in the region and ample supplies. The average LNG price for February delivery into Northeast Asia LNG was $9.50 per million British thermal units, down from $10 per MMBTU last week to its lowest since April 2024, industry sources estimated. The decline was driven by continued softness in Northeast Asian gas demand, said Nelson Hsiung, analyst at data and analytics firm Capella, adding that firm Chinese pipeline gas supplies and strong Japanese renewable power generation contributed to LNG demand weakness.
Moving on to the top news in the energy sector.
U.S. energy firms this week cut the number of oil and natural gas rigs operating for a second week in a row for the first time since August, energy services firm Baker Hughes said in its closely followed report on Friday. The oil and gas rig count, an early indicator of future output, fell by 6 to 542 in the week to December 19, the lowest since September. Baker Hughes said oil rigs fell by 8 to 406 this week, their lowest since September 2021, while gas rigs held at 127 and miscellaneous rigs rose by 2 to 9.
The Venezuelan government rejected the seizure of a new vessel transporting oil, it said in a statement on Saturday, describing it as a serious act of international piracy, after the United States seized another tanker near the coast of the South American country. Venezuela denounces and rejects the theft and hijacking of a new private vessel transporting oil, as well as the forced disappearance of its crew, committed by military personnel of the United States of America in international waters, the statement added. Caracas said that the actions will be reported to the United Nations Security Council, other multilateral organizations and governments. Next, we have the top news in metal markets. Iron ore futures prices traded in a tight range on Friday, but were set to end the week higher, supported by expectation that steelmakers in top consumer China will accelerate feedstock restocking ahead of the Lunar New Year holiday in February. The most traded iron ore contract on China's Dalian Commodity Exchange closed daytime trade up 0.52% at 780 yuan, $110.79. A metric ton, posting a weekly increase of 2.6%, its biggest weekly gain since late October. The benchmark January iron ore on the Singapore Exchange was 0.17% lower at $104.70 a ton, as of 07:01 GMT, but poised for a weekly rise of 2.7%. It touched its highest since November 27 at $105 earlier in the session.
Gold exports from Switzerland fell 15% month-on-month in November as shipments to India dropped to their lowest since February, Swiss customs data showed on Thursday. Demand in India has been affected by a price rally which sent bullion to a record high of $4,381 per troy ounce in October. Spot prices are up 65% so far this year, heading for their biggest annual gain in 46 years, amid demand for safe haven assets. The Swiss data showed that gold exports to India fell to 2 metric tons in November from 26 tons in October, while supplies to China, another major bullion consumer, climbed to 12 tons from 2 tons.
We will now look at the top news in the agricultural sector.
US coffee lovers hoping President Donald Trump's tariff rollbacks last month will soon lower the cost of their daily caffeine hit had better think again. The widespread import tariffs imposed by Trump mostly over the summer, which included top coffee producers such as Brazil, boosted the price of raw coffee beans. But the added costs are mostly still filtering through supply chains and have yet to reach consumers, according to brokers, traders and industry experts. High US retail coffee prices have, in other words, been driven mostly by last year's coffee bean supply shortages, which spurred a doubling in raw bean prices in the 12 months to March.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.